Hi everyone, here is Damien Levy. Welcome in this series of Forex video. Hi and welcome in this webinar where I will teach you today how to trade the news. First, we will go through what are the different events and why they impact the market. Then, we will look more precisely to the most impacting news in the market. Then, we will see how big investors move during them, or most of the time before them. And we will see, finally, the two ways to follow the news. The first is a directional way. It means you will learn to see what direction will take the market correlated to a news event. And I will teach you how you can have access to insiders and professional traders' news feed. Then I will teach you how to analyze the publication of a specific event and how to analyze the numbers by teaching you the 20% rule. Once you know how to find which direction will take the market, I will teach you a Forex breakout strategy and an end of the day strategy based on breakout also. The second way is an undirectional way. It means you will not analyze the outcome of the news to guess what direction will take the market. You will be prepared to take advantage of every situation, whether the price go up or down. So the first thing we will look is the price action and also a breakout strategy. And I will teach you for Forex two types of entry, pending order or market execution with an hedging, because sometimes it's complicated to put a pending order when the boundary of the range are too close to your actual price. It's a broker situation. And then I will teach you binary option, breakout, short-term, entry and trades to take advantage of news event. Then we will look more particularly which currency will be a best choice for you, what are the advantages and disadvantages of the major or the minor and exotic pairs. And finally, I will explain you what type of support and resistance are quite reliable during news event. Let's go. The first thing we have to know is the Forex market moves under the influence of the strength or the weakness of the economy of different countries, which will lead to the strength or the weakness or the currency of those countries. And every day, the news event are the fundamental element that moves the market. So first, let's look at the different elements. What defines the strength or the weakness of an economy are some topics like the employment rate. For the US, this is the non-farm payroll, or the real estate, the production of the country and the sales of the enterprise, the import-export of the country, the personal income and consumption. On the other hand, any natural disaster or terrorist attack can affect the market also. Every new election of a new president of the country will automatically affect the value of its currency. Whatever event that can happen to the country can lead to a movement in its currency. So first, when we look about news event, the most volatile in the market are the non-farm payroll, for example, for the US. Then we find the retail sales, and finally the trade balance. So if we focus on the most impacting news in the market, those three are the best. But sometimes we can also see a very big movement in the market that is initiated by another type of report. So we have to be cautious. And I will explain to you how to see the important news event during the day and how to see those who are not so much important. So now let's look at the why. Why those news events influence each currency. To make it short, if a country has a good inflation and have good data release over the last months, the last week, investors, big investors, will want to invest in this country, buying some company or creating a new company there. They will have a tendency to buy real estate in this country, and this will make huge movement of money in this country if the economy of this country is in good growth. So to make a summary, when the news give a lot of good value for the economy of a country, its value increase, and a lot of investors will have tendency to go in this country, which will make grow the value of its currency. If the country is in recession and the enterprise doesn't make profits and so on and so forth, people will leave this country to find a better place to put their money. That's why the currency will lose its value and the price will fall. Now, about the way it works. Big money, big banks, insiders, those very big investors have most of the time insiders information. It means they are aware of what will happen for the economy of a specific country before it is released to the public and to the retail traders like you and me. So those people will have a tendency to move the market before the news event happens. So the big investors will make their move before the news event is released, if they have the information before, and they will use the release of the data to the public. That will create a lot of attraction of a lot of investors and a lot of liquidity in the market to exit their position where they want to exit their position. So they will use the release of the data, what we will focus on, just as a secondary information where they will just use us also as a retail trader and people who doesn't have the information to exit their position. So, to show you with an example, my vertical line is the moment where is released the news. Let's say 11 GMT, to make it simple. And before, long time ago, quite time ago, not long, the price was making a range like that, and then the big money made their move, and they made a move like that and continue with huge volume to go this way, and now there is a new range until the news. And when the news happened, what happened is there is a huge amount of people, a little chaos. Sometimes they don't know in which direction they want to go, so some people go widely with huge amount up and some people go widely with huge amount down. And the big money who bought, for example here, and after they moved the market going up, so the movement is already done, they will take their money here when it breaks, or if it breaks down here. So this is the way they play with the release of the data of the news when they have an information before. Before the price was ranging in a specific zone, they had the information, they make their move, and the market goes in one direction, and after, when there is a news release, there is a more volatility that pushes the price more high or a little low, and when it breaks some of their boundaries, that's where they get out of their position if the movement is against them, and if the movement break it, maybe they will exit, something like that, or continue in a trend following if the news is very clear in one direction. So that's how they use us. So if we follow the way they act on the long run, we can have access to some of the insiders' information of different events before they happen. And so for us as a retail trader, how can we correctly trade the news knowing that the insiders have most of the times a better information feed or news feed than us? So the first way is to play with their card. It means if we want to play in the field of the big boys, we also have to find a way to have access to the very good and fast information. And to do so, if you want to go deeper in the news feed and have something more quality than what you will find outside, there is some specific news feeds that are quite quality one. If you want to make trading for a living on the long run, maybe those news feeds can be a good thing for you to have the information in real time and to be able to follow a big movement just when it will happen. So this is the first thing, is to try to have access to some insiders information. So to do so, Here is a list of a specific news feed that are used by big bank insiders and big investors. So the first one is on Twitter. The name is Zero Hedge. This Twitter newsfeed is just an information about people who will talk about a news event quite hot actually in the market. And it will give you good heads up sometimes about what is really happening right now at the moment. So it's a very good and real-time news feed for you. You can find also Zero Hedge on website, zerohedge.com. So you can find on this website articles and maybe with a little delay than Twitter, but still good information process. Another one that provides you an audio, like a radio of the news important in the financial market, and there is a free trial, but on the long run it's a paid website, but it will give you really quality news, is ransquack.com. And you have its competitor, which is livesquack.com, which is also a very good one. Those newsfeed will give you in real time in English all the important news happening in the market right now. So it's very interesting to know. And I think livesquack is also free, so it can be a good tip for us. So if we want to follow the insiders and try to analyze on the long run more deeply the news events that move the forex market, those type of news feed can be a basis for us to have access to the good information, the professional information, and this professional information will help us to trade better. Here is the website of Ransquack to show you a little. So it's a real-time audio and will give you, like a radio, the news information that you feel like to have. And you can have access to different package about forex, energy, equities, multi-asset, metals, and so on and so forth. So very professional and quality website to have a very good news feed. The competitor, livesquack, same. Well, website a little lower quality, but it's a very good way to have the important news in the faster way that can happen. This will be maybe for a second step when you will be more experienced in news trading and you will feel like to get deeper in this knowledge. You can go to this type of information and study more about that. Now let's look at another way to spot the movement of the insiders and the big money. This way is way more accessible, and personally this is what I use. This is only the price action. So for example, when you look at your chart, we will take a 15-minute chart, and for example we see this big movement with big candle. As you can see, the movement of the previous candle was quite narrow. You have a channel quite clearly here, so this is a double indication. We have a channel right here, and after this channel you have a very big candle in one direction. So this is Friday and my MetaTrader is GMT plus 3, so it should be 17, it should be 14:30 GMT. So let's look at investing.com, which will be my news feed, and we go on Friday, Friday 30, and GMT, yeah, it's GMT. So it was 14:30. And look at that. Look at that. So right on this, you have all those news at 2:30 p.m. GMT. And without looking at the calendar, we could spot on our chart a movement that has been initiated as 15 and after 30 when the news is released. So looking at the price action, you can know when there is a news event that's happening in the market. And most of the time it's a big candle with huge volume. And as I told you, this is huge volume because a lot of seller at first came back right here, but here there is a lot of buyer because it's a strong support, and this created this climax volume, and that's it. And after the market returned in its original direction and continue in the range. So the point here is you can spot news event just looking at your chart and looking at the price action. It's very clear here. Also, you have a specific movement in one direction, quite clear. You can even make a trend line correctly here. And what happened is at this specific time, a very big, huge candle, and this is the news. So, when there is a news and it's correlated with this big movement, everything is okay. When there is no news and you see this big movement means that the big boys, the big money, the big investors move the market and they know something that makes them act in this way. So this can occur, whatever it's a news event or it's not a news event. And when you see that, you just stay out. I mean, if you want to trade, you will want to trade in the same direction. It will be a very short-term trades. For example, you create this trend line here, and you see this breakout here, and you will use the breakout to go in the same direction, but for 10 minutes maximum, when it will break this trend line quite healthy, going up, going down. And your entry point to be safe should be exactly when the price break it, maybe when it's a little below, which is a resistance and support line right here. So when it broke this support right here and go down, this is where you enter your trade. And you don't know if there is a news event, but it should be something very important because they take action, they move the market with huge movement. So this is the second way you will see that those insiders are moving the market, and actually you don't need more than that. Only the price action can give you all that you need to see what will make the price. You have to be aware because most of the time the price moves when there is a big news event. But sometimes insiders have the information before, so the price action can alert you before the data is released. So the price action tips is useful only to know when the market will be moved. It's not very useful to know in what direction you will go, because you have to have some correlation. You have to also know if there is another news event in the near future or during the day, if you want to trade, for example, an end of the day trade for binary or a forex trade for the day. So now let's go to investing.com and how really we analyze in the depth each news event. So you click first in investing.com, and after you go to the economic calendar here. So when you're here, the time is GMT. You can modify the time to wherever you live to be more convenient for you. And for each news event, you will have some useful information. So the first information is the time. About this point, we know, based on studies, that a news event will impact the market from 20 minutes before until 20 minutes after it's released. So for this one, if the event happened at 1:45 GMT, I need to be aware of it at 1:25 GMT, and I need, if I want to get out, to stay safe, if I play only a technical analysis trading style, I will get out of the market 20 minutes before, so at 1:25, and I will come back to the market only at 2:05. So I let the time of the market to have this crazy move, this big candle that goes, we don't know where it can stop, and when it's gone, after 20 minutes, we come back to the market and we trade again our support and resistance and so on. So this is the basic way. Today we will focus on how we can use this information in our advantage. So first, when we look at one specific news event, we will have first the time, then we have the currency that is concerned by this news event, and then we have the number of bullhead. So as you can see, when there is 3 bullhead, high volatility expected. So when you see that, this is where you can make and you can take profit from this specific event. So this is a PMI, manufacturing PMI. So if you click on it, you will have access to the detail. So it's an overview of the activity of manufacturing sector in China. And so this is a detail of what it is. And after we will have 3 values. At first we will have only 2 values. So the first value is the previous value when the data was released last time. It can be last week, if it's a weekly release, it can be monthly or yearly. So this is what we will look at. We will look at this value, so this is the last value, 49.6, and this is the forecast. So the forecast is what people in general, what the crowd expect this to be. If the actual, which means what is released today, because if you can see, when we go down, for example, those events are not happened yet, and you have only the previous value and the forecast. So if I change my example, so I take the manufacturing PMI, so this one is for US. It has 2 bullheads, so it should impact moderately the market, but 2 bullhead is already impacting, so we expect some volatility. For our main strategy, we will focus only on 3 bullhead, high volatility expected, because this is what we want to take advantage of. So every day we will choose only the news event that has 3 bullhead. And it's better if during the day there is only 1 event on this currency, and since we will trade a currency pair, we have to be cautious that there will be no news event on the other currency. So doing this way, we can avoid any counter effect of another news event against us. If we take, for example, a trade for Euro JPY, if we have only a very strong news on Euro, it's better. And no news from the Japanese yen, it will be way better, because we will not encounter another news event that can contradict our trade. So this is important. We search for the 3 bullhead news, and we don't want the second currency that we use in our trade to have an event during the day with 2 bullhead or 3 bullhead, which can contradict our trade. So once we know what it is, so my manufacturing PMI, quite good news event, we go. So the previous one was 52.1 and the forecast is the same number. What does that mean in practical way? It means if we have a number actual that will be released at 1:45 p.m. of 52.1, the market should stay flat. It means the actual is correlated with the forecast, so people get what they expect to have. So there is no surprise and the market should continue to go in the same way it goes before. But be cautious, because still the news events sometimes are just an excuse for the insiders to exit their position because they will find liquidity. So it can also create a big movement without us expecting anything, because we will not be aware of the information that have the insiders. So be cautious. Even if the actual number is exactly the same to the forecast, we can still make a trade, and sometimes it can win because insiders will move the market in a certain direction. So the principle is, for example, so when we look at a news event like this one, we have 53.3, which is 0.2 minus then the previous number, which was 53.5. So if the actual number which will be released at this time is the same, the market should stay correctly in the same way that it was before for the USD pairs. But you have to know that the USD is the most traded currency, and all the currency pairs are correlated plus or minus. It means every event that happens in the market with 2 bullhead and 3 bullhead will affect globally all the markets. So a little more some currency pairs, a little less some other currency pairs. But we don't control that, we don't know. So since we don't know, we have to be cautious about that. And for the news trading, if you trade a news event like this one, ISM manufacturing employment, with 2 bullhead on the USD, you will search a currency pair that has USD. So for example, Euro USD or USD GPY. If there is no news on GPY for the day, which is perfect, yeah, only one minor here, and after the Asian session is finished. So if you take the USD GPY, it can be a very good choice for this one. So you will take one of the major pairs. So the major pairs have more liquidity, so less manipulation, and you will find a quite reliable effect on the news event on them. If you go to minor pairs, the movement will be bigger, yes, but you will get some noise and sometimes some price manipulation that you will not occur with big liquidity currency pairs like the major ones. So the major are Euro USD, USD GPY, GBP USD, USD CHF, USD CAD, and OD USD, and New Zealand USD also. Those are the major pairs that you will have to trade for the news event in priority to give you a little more safety in your trades. And in Forex also, your trade will be filled better in those big liquidity currency pair. So I was at that point. Now let's look at a very, very important rule that will really impact the market and that can really tell you the market will go in one specific direction or will not go in one other specific direction. Let's change and take this one, the ISM manufacturing PMI June. For this one, the previous value was 54.9 and the forecast, it means people expect the value to be 55.2. So if the value is above the forecast, it will be considered. So to know if the value will impact positively or negatively the currency, you have to click on it and it will give you all the information you need. So right here, once we have clicked on the news, a new window will appear and it will explain to us what will mean the value. If the value is higher than expected, what it will mean for the strength of the currency. So a higher than expected reading should be taken as positive, bullish for the USD, while a lower than expected reading should be taken as negative, bearish for the USD. So this is the first step, because sometimes the value will be higher and will mean it will have a negative impact on the economy. And sometimes the value will be lower and it will mean it has a positive impact for the economy. Let me detail you a little more. If you go through the employment rate, let's say the value is 12 million people, and we have only 11 million people. The value is negative, and it's a lower value than the previous one, which was 12 million. So, a negative value has a negative impact on the currency value, which leads the price to fall. Now let's look at the unemployment rate. For example, in France, let's say we have 6 million unemployed people, and the forecast is 5 million point 5, and we get 5 million. So we get less than the forecast and less than the previous, which was 6 million. So the value is lower, but it means there is more people who have works in France. So this lower value will mean that the price and the economy of France is in better health now than last month, for example. So a lower value means the opposite for the value of the currency in this specific example of the unemployment rate in France. When it's an employment rate, if there is more people who are employed, the value increase and the value of the price and the value of the currency is gaining value because there is more people who are able to work. So this example was just to show you that sometimes a value who is lower will have a positive impact for the currency, and sometimes a value that is higher will have a negative impact for the value. Now let's look when does it work, because it doesn't work all the time. Actually it works for me only a specific amount of time. And what make it works and what make it doesn't work? If the price is around the forecast, there is not so much additional to value to the currency. The price will continue its course without any significant perturbation. But if there is a wild difference between the forecast and what will happen, this is when we will find a spot for us to make a good opportunity of a trade. And the minimum ratio, this is a very, very good information that I give to you now, is 20%. So let me look at it in the detail. We have the last value, the previous one was 54.9, if I take the same example of the ISM manufacturing PMI. And the forecast is 55.2. So what is expected is 55.2. Now, to take a directional trade, up, long or short, call or put, I need to have a value of the data that is above 20%, more than the forecast or below than the forecast. To make a call or go long in Forex, we need the value to be above the 20% difference of the forecast. To go short or put on binary option, we need the value to be below 20%. We can go for a put or go short in Forex. Now, if the value released is in the range between 0 and 20% above or below, we can't take a directional trade because the difference is not important enough. Also, if we have several news at the same time, we will look at all the differences between the release of the data to see if the result goes all in the same direction. If the results contradicts one another, we will not take a directional trade. If all the data go in the same direction, then it confirms that we take a directional trade. Previous value, we agree it's 54.9. The forecast is itself 55.2. So what I expect is a difference of 20% to take action in the right direction, if I trade the news using a specific direction. So if my actual is 55.2 plus 20%, which means 66.24 or above, we will assume that it will give a lot of strength to the currency, and we can buy in binary option for the end of the day, and in Forex we can go long. Maybe it will be the beginning of a trend, so we will define the target later, or we will trail a stop for more security and to keep more movement. So if the value is above this one, the currency will be impacted positively and will go up. Now, if the value is 55.2 minus 20%, So it's 44.16. Same event if the value released is minus than this one, we expect the price to go down. So this doesn't occur very often, but if there is a difference between the forecast and the actual number released of 20%, you can be 80% sure that the currency will go in the defined direction, because this is a very clear sign that the value will gain or will lose value, and specifically that the economy of the country is stronger or is weaker than before. So this is the first element. The first element is you have to check the news and the data released, and if this data is superior or inferior to 20%, you take action, and it's like 80% winning scenario nearly every time. You just have to be careful that there is not another news in the second currency inside your pair that can go against you. That's just it. But for this one, when it will be released for the USD, on binary option you can take an end of the day trade for USD GPY, for Euro USD, because after this news event there is not anymore a news event for Euro or GPY. Remember well, 20% above or below, this will be a critical value that will really affect the market. And when this happens, you go with the direction of this one for the rest of the day, and it's quite a sure ball if you have not any more news connected to the other currency inside your pair. So after this first step, let's look at the first breakout strategy for any news event. Because you know, the 20% difference between the forecast and the actual price will not happen so much often, but when it happens, you can really take advantage of it. Let me explain to you the second way to trade the news event. So remember, you want a 3 bull-head news to trade to have more impact, especially for those strategies. And let me show you in a visual way something quite more simple. We want to have a market before the news event that is quite ranging, and we will look at the 15-minute time frame. And since we have a range with low volume before a good news impact, we will put our resistance and our support. And the first way we will look at will be the price is here in the middle, right here, and we will place a pending order if the price breaks the highest point of the range. If the price breaks through it, we will enter for a call, and if the price breaks the lower low just below the support in this direction, we will go for a put. And our stop loss should be, for example, if I go for a call in that direction, my stop loss should be just here, just below the support zone, and my target profit should be, you have one distance here, should be the distance of the range. So at least you have one risk, one reward. And so this is the first target right here. Then, as we did the last time, we can also split our trades, and we can make, for example, using Fibonacci, we will put our 261 Fibonacci for a target in a real example. So let's take this example of this range. We have a bottom right here, and we have a top here. So When the price break here, you enter exactly, you make a pending order. Let's say the news was exactly here, because I know that's what happened exactly in the morning actually. So this morning the price was ranging, and after there was the open of German and London, and it has the same effect than news event. And when it breaks this zone, this is a simple breakout strategy. You go in that direction, and when you will compute your target, you will go from the total of the range, like that. Your first target should be actually the number of pips that you will have. So you have your range here, bottom and top, and you will take this breakout. So let's say you will enter at this breakout going down, so you should enter when the price break at this level. You don't wait the close and you enter here. Then your stop loss will be just above the ranging zone to make it safe. My red line is my stop loss, and your target should be the same amount at first, which is 24 pips, 246 micro pips. So I will take 200 tag, and this is my target. So my target, I will make it yellow. So this is my target. So you have a risk reward. You put at risk 240 micro pips and you will win 240. It's a 1-1 situation where you will win what you put at risk. Then you can split also your order and place half of your order with this target profit. So to find the second target, you place your Fibonacci like that. Which represent the last big movement going down, but you take it in the opposite direction to get your target. And your second target will be at 261 Fibonacci. The same way we experienced it with our last trend following strategy. So half of your order will end with a risk reward of 1-1. Because there is news events that push the market, you should be in great security. And after, your second target will be at 261.8 Fibonacci. And after, when your first target is achieved, so this order is gone, what you can do, same way as the trend following strategy, you put your stop loss from the extreme top. To put the stop loss in the more security, the 50 level Fibonacci inside the range is the best point. So at least you will have win a 1-1 risk ratio, and after you can win 4 times what you put at risk right now, and your risk is divided by 2 compared to the first trade. So this strategy for your stop loss is way better. And you do the same in the opposite direction. In the opposite direction, if it would have broken in the opposite direction, 20 minutes before the news, you place your pending order, and your pending order will be for a call when the price will be breaking a little above the highest point of the range, so 1 pip above right here. So when the price breaks this line, you enter for a call. And same thing, you place 2 orders. The first order with a stop loss below the range, so you are in security, something like that. And you have 286. So you will place your target profit. My yellow line is my target profit at 286. Right here. So this is my first target. Since there is a news, it will push the price on the 15-minute chart. It's quite secure. And you place same two orders, one half of your trade ending at this point with the same risk-reward ratio, so one reward, one risk. Now you will put the second order. So the second order, we will define it also with the Fibonacci, and we will place it as 261. So our first line is here, and our second target profit will be here. And when the first target is touched, it doesn't exist anymore, we move our stop loss from the bottom of the range to the 50% Fibonacci of the range, which put our stop still in security and not likely to be touched. And if we win this trade, our risk is 132 micro pips and our reward is 436. So it's more than 3 times what you put at risk. And this is the first strategy for the Forex. Now let's look at the second. So the second, the stop loss and the target profit will stay the same. So the difference is your entry point. Let me show you in a drawing, it will be easier. So same configuration, we need the price to be in a range, right? Because we will use this range. Remember, this range has a resistance right here and has a support right here. And when this will be broken up, this line will become the new support and the price will be rejected again in that direction. And same happen in the opposite. If the price go down here, it will break this level, and after this level will become a resistance and will bounce back the price going down. It will have strength to push the price in that direction. This is what we expect and why we put our stop loss just above the top or just below the bottom. This is the principle of this kind of stop loss. Then, let me draw it again. So we have a range. We want a range all the time when we trade the news, because this is our price action security that the price will, whatever happen, will still respect our level and will have difficulty to trigger our stop. So now we have this range, we have this resistance right here, and we have this support right here. And it is 20 minutes before the news at this specific moment. And what will we do at this specific moment? We will make from this level 2 orders. We will make a call and we will make a put at the middle. And the put will have this its stop loss right here, and the call, let me put it in light blue, will have its stop loss right here. What does it mean? It means when the news, it will be 2 o'clock, the news will appear, for example, 3 bull head, big impact, the price will take one direction. So when it will take this direction, this direction, a bullish for example, specifically, what will happen? It will hit our stop loss here. So we lose one trade. But we are in the trade from here, in this one. Which means when the price hit our stop loss, we lose one trade, but at this point we nearly win one and lose one. We are breaking. And what happened next? Our first target, I will make it maybe this color, will be, remember, same target than before, value of this range, same value going up, 1:1 risk ratio compared to the range, and our target will be here. And what will happen when it will be here? You will win all this way for this one. Good win-loss ratio. And you do the same. Actually, you will put 4 trades one with half of your position will stop here, and one with half of your position will stop higher to the 261 Fibonacci. So now, why do we do that? We do that for a specific problem. The specific problem is when you are on the 15-minute chart, because at first you will search a ranging zone before the news event and you will want to place an order. If you want to place a pending order on the 15-minute chart, sometimes the price will be too close from your entry point and you can't place a pending order on your broker. So if you are in the middle, you want to enter here, but you can't do it because of the broker and because of the process of the pending order. You will just buy exactly simultaneously at the same moment. You will make a buy and a sell at the same place, which will remove the pending order that you would have placed. And whatever happens, the price will certainly hit the top or the bottom, so you will win one and lose one. But at least you are in the trade before the news event, so your order will be filled correctly by the broker and you avoid any technical issue from the broker side. That's why this is a good plan to enter a put and a call at the same point. You just place correctly your stop loss at the bottom and at the top of the range and your different target, and you place all at the same time. So you just click here on your MT4 and you make a buy at this price, a sell at this price. There is a little spread all the time. You select the right volume. About the volume, remember also that you want to place in this kind of setup only maximum 2% of your account at risk. It means the difference between your entry point and your stop loss should be, since you will place 2 trades, you will divide by 2, you will split your trade, you will place 1% of your account. So you want this distance of 153 micropips to be equal to, for example, if you have $100, $1 maximum. And the reward will be $2, sometimes $3 compared to that. So that's for the Forex part. For the binary option part, you can do the same, but the expiration will be shorter. For example, so you go on 15-minute chart and you search a range. Same, you have your bottom, your top, and you will need to be focused and wait the breakout. This is the safest way to do it. If you have a news that has a clear direction with 20% of the result above or below the forecast, you can go in the direction of the result for the end of the day if you don't have any news event in the other currency present in your currency pair. And for the end of the day, 80% of the time it's a winning one, with a difference of 20% between the forecast and the actual. When you don't have that, if you want to play on the volatility of this specific news event, you search a range like that, and you will place a trade exactly when the price will break up or break down. This is when you enter for a call, and you will enter for 15 minute or 30-minute maximum. So you will make a call for 15 minutes, entering at best at this point. And if you make for a put 15 minutes, you enter at this point, not below. When it just break a little, you go and you jump into the trend. That's what you will do, and you will have an expiration of 15 minutes to 30 minutes. And if you do that, you search only, same process, the 3 bullhead news. So if we look at the chart, when this breakout occurs correlated with a news event, you enter when it breaks the blue line at the bottom or the blue line at the top. And when it breaks that, you enter in the trade for 30 minutes is better. But your entry point is critical. You have to enter exactly when it breaks this point without waiting the end of the candle. Now let's see the final point of this lesson. Remember, you analyze the 15 minutes time frame to find a ranging zone, and this is the breakout of this zone that you want to trade. And what you have to be aware of is the 1 hour time frame. So as you see on this chart of 1 hour, you have a resistance right here, a support and resistance right here, and a new support and resistance right here. I mean, it's a stronger one. If you have a 1 hour chart, or even more dangerous, more important, a 4 hour chart, support or resistance, it might stop nearly every news event, especially on the major pairs like Euro USD, USD JPY, as I listed before, USD CAD or USD NZD USD, GBP USD, and USD CHF. Because those 4 hour support and resistance are really used by a huge amount of investors, and there is a lot of order flow at those level. So when the price will touch it, it will attract a lot of pending order, a lot of stop loss that even during a news event might be enough liquidity to stop it. So since when you trade the news, you go with the news, if there is a 4 hour chart, support and resistance in your way, it will react like a wall. And as you can see exactly right here, we are in the 4 hour chart. There was a news event on Euro a little earlier, and since support and resistance are zone, we know the zone is around here. It's not a specific yellow line, it's my two yellow line. And what happened there is the price is stopped by those lines, even if there is a big news with 3 bull head in Euro just before. Look at what happened. A very strong movement going down, a very strong movement going down, and after, just when it touched this line, what happened? No more strong horizontal. It stopped totally. And what happened? It continued to go down, but very slowly, with creating a lot of doji right here, which is total indecision. And now the price is totally stopped. So it might break, but it will be a weak breakout. Except if there is another news that will push the price lower for the USD, which is coming later on today. So that's the point. If you have in front of your way a 4 hour chart, support and resistance, you don't trade against it, because it might stop the trade anyway, because of so much order flow there. I think we are good for this lesson. I hope you get it well, and don't hesitate to make any comment under the video or on the Facebook group to tell if you liked it, if it permits you to trade correctly, news event and so on. And it can be a lot of new possibility for your trading using the news, since when you learn about technical analysis, like the style that I trade mainly, you are stopped and you don't trade during news event, which require a little more of study in depth. But in fact, if you know only the 20% rule, it can really make you trade and serve the news correctly, with quite a big percentage of winning trade based on that. Just one last advice: don't assume that a pair will move in a certain way. Always verify with the price action that the price on the chart confirms that the price goes in the same direction, because always what is winning is the price action. Whatever a news event can say, if the market wants to go in one direction, it will go in one direction. So be aware of that and be cautious. I hope you enjoyed this webinar. I hope to see you soon. Bye.